Indian stocks snapped a three-day winning streak today as investors booked profit after early surge. Nifty took to the psychological mark of 6100. Metals and bank stocks that declined sharply after a strong start. Meanwhile, defensive sectors like pharma and select FMCG stocks, they managed to bounce back. Cues from corporate earnings, it was a mixed bag. Kotak Mahindra Bank got a thumbs up after strong quarterly performance, and investors dumped HUL after disappointing volume growth and rising royalty, which now threatens to erode future profitability for India's biggest FMCG company. So what's the way forward for Indian markets from these levels, and the fact that Nifty has cracked below 6,050? What does that indicate for near-term market momentum? We'll discuss that and much more for you in this edition of Markets Tomorrow with Nitin Rakesh of Syntel, Prakash Dewan, Chief Portfolio Strategist with Prakash Dewan Wealth Circle. And to give us a better understanding of the technical setup, we'll connect with Ashwini Gujral, Fund Manager with ashwinigujral.com. But before I bring on board my live market guest, here's a look at the big picture. Nifty has cracked after 3 days of straight line gains. In terms of themes, real estate, select oil stocks, and just about everything in the ADAG group space has corrected today. In terms of specific names, Anantaraj, Unitech, RCom, Reliance Infra, along with Reliance Power, these were some of the losers. Retail stocks also, well, Pantaloon was a different kettle of fish, but for shoppers, I would say it was a pretty decent day, which appreciated by about 19 rupees plus, closed at 445 rupees. What led the decline today, interestingly, was FMCG, followed by some profit booking in private banks. So the bottom line here is that Indian markets, even though the news flow is quite constructive, they are not looking all that strong, and the momentum for sure is no longer looking supportive. So how should one trade and invest in such a market? Let's discuss that with Ashwini, Prakash and Nitin. Gentlemen, good evening to all of you. Thank you for joining us. Ashwini, we lost our way a bit. Momentum has cracked, and even though the news flow is quite constructive, markets are not looking extremely charged up.
Well, as I've been saying that, January, February are pretty choppy months. While it seems on a net basis 6100 and 6000 is getting crossed, it's not really great momentum. Hence, you have to be with specific sectors and rotate your investment as the sectoral moves happen. I think nothing significant. 6040 was the first support. We tested that. In case that gets taken out, then it's back to 5960. Maybe we will not go that far. Chances are that in a strong bull market today, because of Unilever, etc., the market was on a weak footing earlier only. Unilever is looking bad. The obituary is written. It could go as low as 360, 370 over a period of time. But rest of the market is fine. I think Bank Nifty, chances are around the policy will go into the policy at around its highs. So around 12,500, 600 is a decent place to buy Bank Nifty, and I think it will bottom out before the Nifty. So idea should be that stay with oil or banks where news flow is expected, and maybe IT, once it corrects a bit more, will also become worth buying.
Prakash, what is your understanding? Do you think today's market action is just a blip and the big trend has not changed?
Well, you've not actually had a trend, Nikhil. Honestly, what's happening is every day we have a new leadership which doesn't last beyond a couple of sessions. So you had the telecom stock sometime, you had IT before that, oil and gas, of course, led by Reliance because of results. So my sense is that there's a lot of immediate profit booking that happens at higher levels, and people are extremely cautious of taking fresh long position in most of the heavyweights. And earnings season typically is choppy because you have these waxing waning of momentum and interest levels. So I think it will continue till at least mid-Feb, and when that's when you could also have the trigger on the interest rate having come through, and then people will start looking at the budget for the next set of cues. But for an investor, what does he do? I guess very simply stick to the basics, keep a very strong bottom-up base, focus. Don't get swayed by by the momentum in certain sectors because it doesn't last too long. The next wave, I think, would be in terms of reforms. It could probably impact favorably the power stocks. That's a big bet that we are working on, and maybe fertilizers after that.
Nitin Rakesh, this question is coming your way. The consensus view on D Street is that Indian markets are in some kind of an uptrend. Ignore today's selling. The big picture is that we will touch and we will kiss a new high before budget.
I actually don't really think that again, it can go either ways. I'm not smart enough to predict up till what point the rally will go. But I think generally we are in an environment where every decline is an opportunity to buy. And we might be in a situation where we may see a pretty good, sustained, slow and steady move up through the rest of the year. Again, I think I base that on earnings, interest rates, global macro liquidity, and all the things we've talked about. So I think I'm not of the camp that this is a budget-driven rally or a budget-induced momentum.
Okay, HUL, that clearly was the stock of the day. The stock today has cracked. It's a double whammy for HUL. Point number one, HUL cracked because numbers were below estimates, and also the management has indicated that the company will now be charging more royalty or more fee from their India subsidiary, which is Hindustan Unilever, and subsidy will increase from existing 1.5% to 3% plus in a staggered manner till 2018. Prakash, bad news?
Certainly, I mean, it's not only bad news, but the longer term implication of this particular development is very clearly going to put a lid on HUL's growth, not only in terms of price action on the stock, but even otherwise. There is some sort of a fatigue that's kind of set in terms of the top line growth, and they've tried introducing some of the brands which were either to not introduce in India, Tresemme and all, but that's going to take much longer than anticipated given the slowdown in spending that we are very clearly staring in the face. And you look at some of the nimbler, smaller FMCG players, they've done much better in terms of moving ahead, while HUL, the giant that it is, has been probably slow to take up some of the promising segments, particularly on the personal care side. So I think it is in for a tough phase, and you could probably see some sort of mitigation, some sort of moderation in terms of its attractiveness. In any case, it's not very majorly owned, but you could probably see it lose about 20% in the next 6 months from here.
Ashwini, HUL has convincingly cracked below 500. What is the next port of call for India's biggest FMCG company now?
Well, it's topped out. There's no other way of looking at it. Management will also try to sugarcoat that, we are still positive, this and that. But clearly, Reliance and HUL have opposite charts. On one hand, you have excellent results and the good news is just starting out. On the other hand, you have the stock which has topped out where all the good news is in and now the bad news is starting out. So initial target should be about 440. But that's a minimum target. I think finally it will go to 360, 370 kind of zones. Generally when the markets are in a rally mode, HUL goes into a bear market, and that seems a fairly good possibility with most FMCG stocks which are consumer staples. I'm not talking about consumption, but consumer staples likely to go through a bad run.
Well, the price to perfection, and the problem with such elevated valuations is that a little bit of bad news and the market reaction is very swift on the downside. It's all about expectation management. Infosys numbers were not way above estimates. They were marginally above estimates, but expectations were so low that the stock really got re-rated on the upside. Let's take a break, but before that we are leaving you with some FNO strategies for tomorrow morning from Sandeep Wagle, who's got a strategy on Asian Paints, and after numbers he's also bullish on that stock.
So I have a buy in Asian Paints, Giant Futures 4410 to 4400, stop loss of 4370, target of 4500, risk of around 5000, reward of around 11,250. REC, I have a sell in the range of 244 to 245, stop loss of 248 and a target of 235, makes a risk of 4,000 per lot and a reward of 9,000 per lot.
Prakash, Z, Sun, do you like both these franchises? Do you like none of them, or do you like one of them?
No, I think both of them have their unique strengths, and they've been very fair and rewarding to investors. How much of that will continue going forward? I would still put my money onto Zee because of the kind of diversity that it manages and the kind of different revenue streams that add up to Zee's strength. And the other mid-cap company that we believe is benefiting but hasn't really been discovered that largely as much as Sun and Zee is Raj TV. So that's the other stock that we've been kind of, booking profits from a few of these and moving into. So, digitization as a theme will probably still have some shelf life. And I would continue with Zee at least as far as that is concerned.
Ashwini, off late we haven't discussed media stocks.
Well, that seems to be a secular trend, and chances are that post mild corrections you will continue to see upside there. I think DEN Networks is something which has made a recent new high. So on all declines, Hathway, DEN, these companies should be bought. I'm not too sure about broadcasters because maybe it's a bit overhyped, but DEN Networks clearly you could go up to levels about 300. Hathway, longer term targets are fairly, close to, maybe about 400. So these cable stocks are much better looking than your broadcasters. And Dish TV, you've seen there's nothing much to do in distribution or, broadcasting.
Okay, retail stocks. Retail stocks today were strong. Pantaloon Retail, in fact, was one of the biggest gainer when it comes to BSE 100 basket. Pantaloon Retail today went up. It went up on strong volumes. The rub-off effect was clearly visible on Shoppers, which also appreciated by about 4.5% on decent volumes. That's Pantaloon Retail for you. It appreciated by about 23 rupees plus. Look at the 52-week graph for Pantaloon Retail. For the year 2012, Pantaloon Retail indeed has been a special situation stock. Nitin Rakesh, do you think retail could really be a money spinner for 2013?
It's too early to say, Nikunj. I think we have to see how the FDI policy gets implemented and if there is an interest from foreign investors. But I think having said that, it was a tough environment for retail. I wouldn't say that the clouds have fully disappeared on that front.
Prakash, Pantaloon Retail at the current juncture, do you think all the good news is priced in?
No, you could have emergence of additional good news which possibly will take the stock further higher up. But if you look at something that's according to me undervalued and inherently could do much better is Trent. It's a portfolio that's much more robust and offers very diverse revenue streams all within the retail framework and comes with a pedigree that I believe is most amenable to the retail business as compared to some of the other corporate houses that are there.
Because if I look at the number of stores,
absolutely they have possibly focused more on arriving at establishing themselves in terms of the quality delivery mechanisms first and then probably scaling up. So FDI also kind of possibly would look out for some opportunities in those in that kind of a fashion and not necessarily something that's already built up and expanded.
Ashwini, are you also hot on Pantaloon Retail after today's strong surge?
If your view is pretty short term, I think then you got an opportunity to buy today all day. But these are not great longer term levels to buy. Maybe longer term people should wait for that 230, 240 zone. Whenever it gets there, that's a good place to buy. But for the short run, easily you could see the stock going up to 300. But clearly this is something that's bottomed out and is now making higher highs. So that's the way you look at it instead of trying to think that this is a fairly cheap stock or it's just started moving.